China just weaponized rare earth minerals, and the tech industry is panicking. In December 2025, China expanded export controls on critical rare earth elements including gallium, germanium, neodymium, and dysprosium. China controls 70% of global rare earth mining and 90% of processing capacity. The United States imports 80% of its rare earths from China. These materials are essential for semiconductors, electric vehicles, fighter jets, wind turbines, smartphones, and displays. Without them, production stops. Neodymium prices are up 40% since the announcement. Gallium is up 30%. Tesla, Nvidia, Apple, Intel, they're all exposed. The F-35 fighter jet uses 920 pounds of rare earths per aircraft. Full enforcement is expected by Q2 2026. Tech stocks are about to collapse. This is the biggest supply chain crisis since COVID, but nobody's talking about it. China just cut off the materials that power modern technology, and Western nations have no backup plan. In the next 13 minutes, I'll show you exactly what's happening, which companies are most exposed, and how to position your portfolio before the crash accelerates. Hit subscribe and turn on notifications. Tomorrow I'm releasing the rare earth shortage, which stocks to avoid. Let's go. Rare earth elements are a group of 17 metallic elements critical to modern technology. Despite the name, they're not actually rare in terms of abundance. They exist in Earth's crust at concentrations similar to copper or lead. What makes them rare is that they're difficult and expensive to extract, refine, and process. The mining and processing generate significant environmental contamination, which is why most Western nations abandoned domestic production decades ago and outsourced to China. China now controls approximately 70% of global rare earth mining and a staggering 90% of global processing and refining capacity. The United States, by contrast, produces only about 43,000 tons annually compared to China's 168,000 tons. And even the rare earths mined in the US are often shipped to China for processing because America lacks the refining infrastructure. These elements are absolutely critical to advanced technology. Neodymium and dysprosium are used to make the powerful permanent magnets found in electric vehicle motors, wind turbine generators, and hard disk drives. Europium and terbium are used in LED displays and screens. Gallium is essential for semiconductor manufacturing, particularly for high-frequency and high-power chips used in 5G networks and military radar systems. Germanium is critical for fiber optic cables and infrared optics. Yttrium is used in lasers and superconductors. Without these materials, you cannot manufacture electric vehicles, fighter jets, smartphones, renewable energy systems, or advanced semiconductors. There are no substitutes for most applications. You either have rare earths or you don't produce the technology. In December 2024, China first announced export restrictions on gallium and germanium, citing national security concerns. In December 2025, those restrictions were expanded to include a broader range of rare earth elements. China's Ministry of Commerce stated that exports would require special licenses and would be limited to approved buyers under approved terms. In practice, this is a de facto export ban to adversarial nations, primarily the United States and its allies. The United States is catastrophically dependent. According to the U.S. Geological Survey, approximately 80% of U.S. rare earth imports come from China. The U.S. National Defense Stockpile, designed to hold strategic reserves of critical materials, contains virtually no rare earths. Domestic mining operations like MP Materials in California are ramping up production, but they won't reach meaningful scale for years. Australian companies like Lynas Rare Earths are also expanding, but global capacity outside China remains a fraction of what's needed. The timeline is critical. China announced the expanded ban in December 2025. Full enforcement is expected by Q1 or Q2 2026. Companies that rely on rare earths have perhaps 6 months of existing inventory. After that, production halts unless alternative sources are secured, and there are no alternative sources at scale. Here's the unfair part. For decades, Western corporations outsourced rare earth production to China to cut costs and avoid environmental regulations. They prioritized quarterly profits over strategic security. Now, those same corporations are caught with zero leverage and zero alternatives. Meanwhile, Chinese companies have spent 20 years building vertical integration in rare earth supply chains, securing resources in Africa and Latin America, and developing processing technology. Retail investors who own Tesla, Apple, Nvidia, Intel, Ford, and defense contractors have no idea their portfolios are about to be gutted by a supply chain they didn't even know existed. Wall Street analysts aren't warning them. Earnings calls don't mention it. The mainstream media is barely covering it. By the time CNBC reports that Tesla is halting production due to rare earth shortages, the stock will have already crashed 40%. Meanwhile, Insiders and hedge funds who understand supply chains are rotating out of exposed tech stocks and into rare earth miners, commodity plays, and Chinese equities that benefit from the export ban. The wealth transfer is happening in real time, and retail investors are the last to know. Let's look at the data. According to the U.S. Geological Survey, global rare earth mine production in 2024 was approximately 350,000 tons. China produced roughly 168,000 tons, about 48% of total mine production. However, China controls approximately 90% of global refining and processing capacity, meaning even rare earths mined elsewhere must be sent to China for final processing. The United States produced approximately 43,000 tons of rare earth concentrates in 2024, primarily from the Mountain Pass mine operated by MP Materials in California. However, much of that concentrate is shipped to China for separation and refining. The U.S. has minimal domestic rare earth processing infrastructure. In December 2024, China imposed export controls on gallium and germanium, requiring export licenses. According to Chinese customs data, gallium exports to the United States fell by over 90% in the first quarter of 2025. Germanium exports fell by approximately 80%. Prices spiked immediately. Gallium prices rose from around $250 per kilogram in mid-2024 to over $325 per kilogram by late 2025, a gain of roughly 30%. Germanium prices rose similarly. In December 2025, China's Ministry of Commerce expanded export controls to include a broader range of rare earths, including neodymium, dysprosium, terbium, and europium. While exact tonnage restrictions have not been publicly disclosed, industry sources report that export license applications from U.S. and European companies are being denied or indefinitely delayed. Neodymium prices have risen from approximately $75 per kilogram in mid-2024 to over $100 per kilogram by late 2025, an increase of approximately 40%. Dysprosium, used in high-performance magnets, has seen similar price increases. The U.S. Department of Defense has acknowledged the vulnerability. A 2023 report by the Government Accountability Office stated that the U.S. military is critically dependent on Chinese rare earths for weapon systems. The F-35 Lightning II fighter jet, for example, requires approximately 920 pounds of rare earth elements per aircraft. The Virginia-class submarine uses over 9,000 pounds. Without Chinese supply, defense production is at risk. Tesla, which produces over 1.8 million electric vehicles annually, requires approximately 2 kilograms of neodymium and dysprosium per vehicle for motor magnets. That's over 3,600 tons annually. Ford, GM, Rivian, and other EV manufacturers face similar exposure. If rare earth supplies are cut, EV production halts. China has weaponized rare earths before. In 2010, during a territorial dispute with Japan over the Senkaku Islands, China quietly halted rare earth exports to Japan for 2 months. Japanese manufacturers panicked. Rare earth prices spiked 10x within months. Neodymium went from $40 per kilogram to over $400. The crisis eventually eased as China resumed exports, but the message was clear. China controls the rare earth supply chain and will use it as leverage. In 2019, during the U.S.-China trade war, Chinese state media openly threatened to cut off rare earth exports to the United States as retaliation for tariffs. Prices spiked again. The U.S. scrambled to identify alternative sources, but found none at scale. China backed down, but the vulnerability was exposed. Now, in 2025 and 2026, China is executing the threat. This time, it's not a negotiating tactic, it's strategic decoupling. China is preparing for a world where technology and defense supply chains are weaponized. The West is not prepared. 4 signals to watch. Signal 1, watch rare earth prices. If neodymium breaks above $150 per kilogram, double the 2024 baseline, it confirms a full supply shock. Dysprosium above $500 per kilogram and gallium above $400 per kilogram would signal panic buying and supply exhaustion. Signal 2, watch for major automakers to announce production delays or shutdowns. If Tesla, Ford, or GM announce they cannot source rare earth magnets for EV motors, it confirms the supply chain is broken. Stock prices will collapse. Signal 3, watch for the U.S. government to invoke the Defense Production Act to prioritize rare earth allocation for defense contractors. If this happens, it means civilian tech companies are being cut off to preserve military production. This would be a national security crisis. Signal 4, watch tech stock price action. NVIDIA, TSMC, Apple, Intel, Tesla. If these stocks break key technical support levels and enter sustained downtrends, it confirms the market is pricing in a supply crisis and margin compression. The fundamentals are undeniable. China controls 70% of rare earth mining and 90% of processing. The U.S. imports 80% of its rare earths from China. China has imposed export controls effective Q1 to Q2 2026. There are no alternative sources at scale. Rare earth prices are up 30% to 40% and rising. Every electric vehicle, smartphone, semiconductor, wind turbine, and fighter jet requires rare earths. Without them, production stops. The U.S. national defense stockpile is virtually empty of rare earths. Domestic production is years away from meaningful scale. This is not a temporary disruption. It's a structural shift in the global technology supply chain. Companies that cannot secure rare earth supplies will see production halts, margin collapse, and revenue crashes. Here are 3 risks to consider. Risk 1. Tech stocks with high rare earth exposure, Tesla, Nvidia, Apple, Intel, defense contractors, face production halts and margin compression. Avoid or short these names. Risk 2. EV manufacturers are catastrophically exposed. Without neodymium magnets, EV motors cannot be built. If you own EV stocks, exit now. Risk 3. Semiconductor companies that rely on gallium and germanium for advanced chips will face supply shortages and price spikes. Margins will collapse. The hedge. Rare earth mining stocks like MP Materials, Lynas Rare Earths, and China Northern Rare Earth. They benefit from higher prices and supply constraints. The media and Wall Street will tell you this is temporary, that supply chains are resilient, and that alternatives will be found. This is psychological warfare to prevent panic selling. There are no alternatives. China spent 30 years building this monopoly. You cannot replace 90% of global processing capacity in months or even years. Trust the data, not the narrative. Scenario 1, 45% probability. China enforces a partial ban. Prices spike 50% to 100%. Tech companies face margin compression. Stocks fall 15% to 25%. Production slows but doesn't halt. This is the base case. Scenario 2, 35% probability. China enforces a total ban. Supply crisis. Production halts. Tech stocks crash 30% to 40%. Recession. Defense production threatened. This is the crisis scenario. Scenario 3, 20% probability. Diplomatic resolution. Export ban is lifted or relaxed in exchange for concessions. Prices stabilize, markets recover. This is the optimistic scenario. Timeline. Full enforcement by Q2 2026. Supply crisis hits by mid-2026. Tech earnings collapse in Q3, Q4 2026. China banned rare earth exports in December 2025. China controls 70% of mining and 90% of processing. The U.S. imports 80% from China. Neodymium up 40%. Gallium up 30%. Full enforcement by Q2 2026. Tesla, Nvidia, Apple, Intel, all exposed. Watch 4 signals. Prices double. Automakers delay production. Defense Production Act invoked. Tech stocks break support. Exit tech stocks. Buy rare earth miners. Subscribe for tomorrow's The Rare Earth Shortage, which stocks to avoid. Comment. Are you holding tech stocks? Let's go.